You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borg. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Friday, 9th day of June, 2023. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. This is our second live broadcast of the day. We do 2 live broadcasts every trading day. The first broadcast is from 9:30 a.m. to 11:30 a.m. Eastern. That is our live training room. It is reserved for members only and those who are taking their 1-week free trial. If you've not taken your 1-week free trial, you can do so by going to mytradingiq.com. At the top of the page, there's a button that says 5-day free trial. And it really is free. No credit card required. We invest our time, energy, and resources in you for 5 days, giving you access to everything our lifetime members have access to before you spend a dime. At the end of your 5-day free trial, we want you to be able to make a well-informed and intelligent decision as to whether or not trading is right for you. Not everybody's going to become a trader. Not everybody will be a banker or a brain surgeon or a pilot. But if you feel it's been put on your heart to learn the business of trading, you get 5 days to experience everything we offer, everything we teach. Ask any questions you want, enjoy one-on-one mentoring sessions before you make a decision as to whether or not you want to invest in yourself as a trader. Now, when the live training room ends each morning at 11:30 a.m. Eastern, take a 30-minute break and come back for the afternoon broadcast, which begins at 12 noon Eastern. Now, there are 2 different ways to join this afternoon broadcast. Best way, go to mytradingiq.com, scroll down to where it says afternoon broadcast, click the link, complete the 30-second registration form, and you are done. Every trading day going forward, you'll get an email about an hour before this broadcast starts. So at 12 noon Eastern, all you have to do is click the link in the email you received, and it will automatically log you into our platform where you have access to the question box so you can ask questions and participate in the discussion. Now, there will be days you're out of the office, away from the desktop, but you still want to join the broadcast live. There will also be days when you're just busy doing something else and you can't join live. We have a solution for both of those predicaments. It's called our YouTube channel. Easy to remember, youtube.com/CFRN. That's really all you have to remember because you already know youtube.com/CFRN. Not only do we broadcast live every trading day on our YouTube channel, as we're doing right now, but we also archive every daily broadcast. Currently, there's over 2,200 daily episodes archived for your educational and viewing pleasure. And for those who are new to the world of CFRN, it's a great way to get to know who we really are. Anybody can say anything today and do anything today, but where did they stand a week ago, 6 weeks ago, a month ago, 6 months ago, a year ago, 2 years ago? Thanks to YouTube, you can find out exactly where we stood. You just scroll back and pick a few days at random. You don't even have to listen to the whole broadcast, but do fast forward to the part where I'm doing the recap of the alerts, and fast forward to the part where Michael is doing the recap of the live training room for that day. Quickly, you will see the thread of connectivity, the thread of continuity that is woven through each and every daily broadcast. One more time, youtube.com/CFRN. You can join us live from anywhere on planet Earth with an internet-connected device, or you can watch today's broadcast and all the other broadcasts at your leisure by simply going to youtube.com/CFRN. While you're there, be sure to click the subscribe button and the little bell, one that helps more new people find our channel, and it alerts you anytime we go live. Maybe there's some kind of breaking news, and so we don't go live at a regularly scheduled time, but it's something worth talking about. If I go live, you'll be notified if you've clicked the subscribe button and the little bell. With all that said, let's open with a word of prayer, as we do every day. We started a new topic yesterday, Beyond Me, a Secret of Happiness. Now, for those of you that are tuned in via the YouTube channel, you already know the title of today's episode, and it is, Why Did the ES Rally Grind to a Halt where it did? We'll talk about that in a few minutes. But first, our morning devotion. Today's scripture, John 12 through 17, from the Message translation. Then he said, "Do you understand what I have done to you? You address me as teacher and master, and rightly so. That is what I am. So if I, the master and teacher, washed your feet, you must now wash each other's feet. I've laid down a pattern for you. What I've done, you do. I'm only pointing out the obvious. A servant is not ranked above his master. An employee doesn't give orders to the employer. If you understand what I'm telling you, act like it and live a blessed life." Now, if you have the red letter edition, those letters would be in red, because that was Jesus talking. Again, it was John chapter 13, verses 12 through 17. So again, we're talking about the secret of happiness. Jesus clearly and unapologetically calls every one of his followers to become servants. For the people who bear his name, kindness is a distinctive characteristic. He explicitly encourages expressing kindness through acts of service. This is a principle, distinguishing factor to which every follower of Jesus should aspire. Jesus calls us to live beyond ourselves, to look beyond our concerns, titles, and reputations. A practical opportunity God may give us is perhaps letting a mother with small children go in front of you through the grocery checkout line, or helping clean up the office or classroom after everyone has gone home, or even just sharing the remote control. In his humility, Jesus, the second person of the Trinity, said washing dirty feet was not beneath him, and it should not be beneath us. Simple acts of kindness abound. Take time today to look for simple acts of kindness that can make a difference in someone's life. Your life will never be the same when you choose to live beyond yourself. As you engage with God's Word, what is God saying to you? What does it mean to you? What action steps do you need to take? After you reflect on these questions, bring everything to God in prayer. So join me in a word of prayer. Heavenly Father, we come before you today with hearts full of reverence and gratitude, acknowledging you as our Lord and teacher. As we reflect on the powerful words spoken by Jesus in John 13, our spirits are moved to humility and a deeper understanding of servanthood. You call me teacher and Lord, and you are right, for so I am. If I then, your Lord and teacher, have washed your feet, you also ought to wash one another's feet. For I have given you an example, that you also should do just as I have done to you. Truly I say to you, a servant is not greater than his master, nor is a messenger greater than the one who sent him. Lord, we acknowledge you are our ultimate authority and source of wisdom. You are the embodiment of love and humility, and you have set the perfect example for us to follow. We confess that at times we have failed to embrace the call to serve one another, humility, and selflessness. Today, we surrender our pride and selfish ambitions to you. Teach us to humbly serve one another as you have served us. Help us to follow your example of sacrificial love, putting the needs of others before our own. Fill our hearts with passion that we may see those around us with your eyes of love. Give us the courage to step out of our comfort zones and reach out to those who are hurting, lonely, or in need. May we extend a helping hand, a listening ear, and a comforting presence to those who are going through difficult times. Lord, help us to overcome the barriers that separate us from one another. Break down the walls of prejudice, pride, and judgment that hinder our ability to love and serve one another. Fill us with your Spirit that we may demonstrate unity, reconciliation, and acceptance in a divided world. Grant us the grace to forgive one another, just as you have forgiven us. Help us to bear with one another's weaknesses and differences, extending grace and understanding in every interaction. May our words and actions reflect your love, and may we be agents of healing and restoration in broken relationships. Father, we thank you for the privilege of being called your children and for the example of servanthood that you have given us. Strengthen us, empower us, and equip us to serve others with joy and sincerity. Use us as instruments of your love and grace to bring hope and transformation to the lives of those around us. It's in the name of Jesus, our Lord and teacher, that we believe and pray. And everybody said amen. Well, happy Friday, guys. I hope it's a happy Friday for you, whoever you are, wherever you are. Let me give you the numbers from around the world. Start here in the U.S. with the cash markets, or the indices as they're called. Currently the Dow's up 7 points. The Nasdaq's up 34. S&P 500 is up 6.5. And the Russell 2000, our man in the street, is down 14. This is some pretty quiet sideways trade. And when we go to the charts, I'll show you why the market stopped where it stopped. In the commodity basket, crude oil is down 19 cents, trading 71.10 last. Gold is down $2.30, trading 19.76 last. Silver is up 8 cents, trading 24.43 last. In the Asian markets at the close, the Nikkei posted a gain of 623 points. That's almost 2%. Shanghai rose 17 points. The Hang Seng gained 90. And in the European markets at the close, FTSE down 37, the DAX down 40, the CAC down 9. Only mover and shaker in that whole bunch is the Nikkei. So it was a green day for Asia. It was a red day for the UK. And right now it is a mixed Radio Friday here in the US of A. We have 3 of the major indices in the green: the Dow, the Nasdaq, the S&P. But the Russell 2000, our man in the street, is in the red, but only by 13 points. So we'll see where we are at the end of this broadcast. Now, Valerie just sent me over current recap for Logic 247. So give me 1 second here to properly format it for my screen. Her resolution is different from mine. So just hang on a second. I think that did it. That did it. Okay. Now, for those who may be new, Logic 247 is our 24/7 around-the-clock E-mini alert service. Not just the E-minis, but also crude, gold, silver, euro, bonds, And we even added soybeans this week. We used to trade soybeans a lot back in the day, but I had a special request to add soybeans this week, so I did. And if the feedback's positive, I will continue to do so. We're in week 253. Oh, I think that's supposed to say to Friday at 12 p.m. Here, let me double check. I'm sure that is the case. That just came in. No, my bad. Now I got to do that whole reformatting thing. She sent me the right alert. I just grabbed the wrong alert. So definitely not her fault. My fault. But it'll just take a second to get everything lined up. Okay, here we go. Now we got the current recap. Today is Friday. We're in week 253. Over the last 253 weeks, we've issued over 14,350 individual handcrafted alerts. Since the markets opened this past Sunday night at 6 p.m. Eastern, that's when the alert channel opens for business, and it stays open around the clock till Friday afternoon at 5 p.m. Eastern. Futures trade around the clock. We have traders around the globe. And that's one of the things we really like about futures. It enables even those who still have a day job the ability and the opportunity to trade and learn how to trade. Since Sunday night at 6 p.m. Eastern, we've issued 77 alerts. 14 never triggered. Still waiting on 6. That gives us 67 actionable alerts, of which 13 or 19% would have been stopped out based on not risking more than $300 per contract per trade, less when possible, based on market structure and a simple 3-step process that we teach all of our lifetime members in their unlimited one-on-one mentoring sessions. Now, over the last 253 weeks, we've averaged 20% or less of the alerts being stopped out based on the risk profile I just explained. I did some mentoring this morning, one-on-one, and so I have not put out any alerts yet today, but as soon as the broadcast ends, I'll take a look at the markets, and if there's any opportunity available, I will most certainly publish those alerts this afternoon. Now, the concierge trade alerts, they went out last night later than normal. I notified everybody in the discussion group that I had a commitment and that any alerts, logic or concierge, would be delayed until after the workshop. So the members only workshop is every Thursday night at 8 p.m. Eastern. It used to be 9 p.m. Eastern. We recently changed it. We've been doing those every Thursday night since 2008. So let me show you last night's alerts. Now, the CTAs are different than the logic alerts. As I explained, the logic alerts come out around the clock, 24/7. It could be 2 a.m. or 2 p.m., whenever opportunity presents itself. But the CTAs are different. They're based on historic price action, and they're published as a static report. good for the entire session. Normally they come out about 6:15, 6:30. That's what I strive for. But last night I just wasn't able to. They came out at 11:20 p.m. Eastern. Now, we cover all the same markets with the CTAs as we do with the logic alerts. What do you do with these numbers when they come out? Well, the first thing you do, we'll use the ES as an example. Go to your 30-minute chart. Make note of where price is at this time. It's always going to be between these two numbers. If price gets above the 30-minute BBC, then it's attempting to reach the long target. If price gets below the 30-minute BBC, it's attempting to reach the short target. When we go to my charts, you'll see a green line on all of my charts. That is the BBC. It stands for bull, bear, cross. When price crosses above it, we're bullish. We anticipate higher prices. When price crosses below it on the 30-minute chart, we're bearish. We anticipate lower prices. It's pretty simple. You still have to look left to spot potential obstacles. Previous swing highs, swing lows can become current support or resistance. Even a weekly trading zone can be support or resistance. Depends upon where it falls in the alert. Over time, you'll learn how price behaves at a weekly trading zone. They're published every Monday morning for our members and trial members at 6:15 a.m. Eastern. Once they're published Monday morning, they're carved in stone for the entire week. They don't change in any way whatsoever. Now, the logic alerts come out around the clock. The CTAs are published each evening shortly after the Globex Open. The weekly trading zones are published Monday morning, 6:15 a.m. Eastern. We've published the weekly zones for our members since December 14th, 2009. Now, while you're making note of where price is at the time the report is published, draw a line in the sand at the long target and a line in the sand at the short target. When we go to the charts, you'll see what my line in the sand looks like. You can make yours look any way you want. But by doing that, they serve as great visual cues to help you stay on the right side of the street. In other words, if the market's rallying, you don't want to be selling, and the market's falling, you don't want to be buying. It's really that simple. Trading's not easy. It never has been, never will be, but it can be simple. Now, because this broadcast is open to the public, if you're not a member or a trial member, you did not get this report last night. So if you want to grab a screenshot, go ahead, because before the broadcast is over, we will walk through each and every individual market. Now, 45 minutes into this broadcast, which is about 15 minutes from now, Michael will join us. He'll give us a recap of everything that happened this morning in the live training room. And then at the top of the hour, we'll go live on the TradingView platform, do some live trading for 30 minutes. And then once we're done with that, any of the markets that I've not yet had a chance to recap, we will go through each and every one. And then we will also announce at that time our tweet of the day. And we'll wrap it up with our good word for the day. So I'm sure you've had time to get your screenshot. So let's go to the charts. This is the S&P 500 E-mini daily chart. Early on in the week, or maybe it was even last Friday. I don't remember. We already had our fib retracements, okay? But I drew in fib extensions. This is the fib extension tool. This is the retracement tool. They both use the same 13th century math, but in a different way. The fib retracement tool shows you where, when the market is dropping, it's most likely to find support. We have to adjust it because we've now put in a new high. Now, the October 13th low, that hasn't changed. So we don't want to move that. Just want to move this up to the high of the day. Now, the high of the day, 43.25 half. See if I can get it a little closer. 43.26 half. It's close enough for government work. Okay, when I drew these fib extensions earlier in the week, or last week, whenever, we had already surpassed the 24% fib extension. These lines all the way across, these are retracement levels. See how price here found support? Well, actually, these fibs, now that we've put in a new high, these retracement levels will be valid going forward. And if that confuses you, book a mentoring session. I'll explain it to you. So, for the extensions, I connected this important swing low to this important swing high at the time. And then I connected that to the retracement low. And that 13th century math projected into the future targets, areas where we would expect the market to find resistance. And look where we found resistance. Right at the 38% fib extension on the daily chart. Now, you may wonder why we're starting with a daily chart. You might say, I don't even trade the S&P. Sure don't trade a daily chart. Well, I trade the S&P, but I don't trade the daily chart. But I do look to the daily chart to help me understand what the institutional traders are doing. It is the institutional traders that move price because of their account sizes, typically in the hundreds of millions, even billions of dollars. So it's their trades that truly move price. Okay? They look at daily, weekly, and monthly charts the way we look at 30-minute charts, 5-minute charts, tick charts, and range charts. Earlier in the day, we had a big green candle all the way up to that 38% fib extension. And when we hit it, look what happened. Now we have a doji. Could become a red candle. Now, as this green candle was building, what would that tell me? Institutional traders are buying the market. But once we hit this and stalled out, what that told me was that institutional buyers had hit the pause button. It takes financial commitment for price to rise. For price to drop, all that has to happen is the institutions hit the pause button. Now that we've dropped back to yesterday's high, might they feel confident enough to start buying again and push us back up to the high of the day? Yes. And if they do, we'll see that happen. But if they're truly uncertain, they'll keep buying on pause. And at some point, the institutions that specialize in short selling, they'll come out of the woodwork and drive price down like this. Now, price came right down to where we discussed the market should find support. Early on in the week, we identified the potential resistance, and yesterday, we identified the support, the step line, and blue and climbing. And in the workshop last night, we talked about this. This black line is called the step line. And because we've been consolidating sideways now for 1, 2, 3, 4, 5 sessions since Monday, we did put in a new high, but look what happened once we did. Once we hit that fib extension. Now, fibs are not a proprietary tool. They've been around since the 13th century, long before these electronic markets even existed. So if I know the institutions are looking at the daily chart, when I see price hit this 38% fib retracement, and look, it's turning red. Okay. Now remember, we've got support at the step line, that's the black line, blue and climbing, and then the 24% fib extension. Yesterday's low of the day was, literally to the tick, the 24% fib extension. And then today, which started last night at 6 p.m. Eastern, we ran up to the potential resistance we'd already identified, and now we're back to support. When the market finds resistance, it will always go looking for support. Once it finds support, it will go looking for resistance. Price flows the same across all markets and all time frames. Futures, stocks, crypto, forex, ETFs, doesn't matter. Price flows from support to resistance, back to support, back to resistance, over and over, again and again. It's a never-ending cycle. And price always reverts to the mean. Remember, I said the green line, it's called the BBC. When price gets above it, we're bullish. We expect higher prices. Price gets below it, we're bearish. We expect lower prices. Higher prices. Lower prices. Higher prices. Pretty simple, right? Trust me, we worked really hard many years to make it that simple for you. So we know institutional buyers are very bullish at the open of the session. That bullishness has waned. Okay? We know where important resistance is. We know where important support is. No matter what you trade, if it's crude or gold, Walmart or Amazon, Bitcoin or the British pound, if you will spend just 2 minutes with the daily chart when you begin your trading session, and then maybe peek at it, a couple times throughout the session, you'll be able to do what the market's doing. The market is always right. So people are always touting these strategies and these indicators and these algorithms that will beat the market every time. Why would I want to beat the market? The market's my business partner. It's how I make a living. I don't want to beat it. But what I do want to do is I want to do exactly what the market's doing. Just long enough to get my goal for the day. And then put the mouse away. What? Just put the mouse away? Yeah. You see, trading not only gives you the ability to earn an above average income, but it also provides something far more valuable: time. Money is a renewable resource. Time is not. No one has yet figured out a way to whip up another batch of time. Okay? So, when you learn to be a consistently profitable trader, not only do you have the opportunity to earn an above average income, but you have time, lots of time, to spend with your family, pursue your passions, follow the calling that Jesus has placed on your life. He created us all for a purpose, all for a reason. And something I learned many years ago when my wife and I built that orphanage in Kampala, Uganda, East Africa, way back in 2000. It's been 23 years. And some of you have known me since then. I quickly learned ministry costs money. I'm like, hey, God, I'm trying to do your will. It clearly says in the book to care for widows and orphans in their affliction. God says, yep. I says, well, where am I going to get the money? If God gives you a mission, He will also give you provision. If you're out on a mission for God and He's not making provision, then there's a chance maybe you kind of missed what God was saying and you tripped off on your own vain imaginations. Okay, we all make mistakes. Rein it in. Go into your prayer closet. I always wanted to sell those on TV, on those late night commercials. A portable prayer closet, right? We know prayer closet's just a term, but I envisioned this structure that would look very nice and blend in with, the decor of your home. Kind of like a confessional booth at a Catholic church, except there's no priest in there. It's just a place where you can go and close the door and just spend time alone with God. Maybe have a little lamp in it, for reading the Word. But see, that was a vain imagination because it never went anywhere. I never put any energy or effort into it, so that could have something to do with it as well. But I thought it would make a great thing to sell on TBN or, Fox News or whatever. But anyway, let's keep moving. So I've made my case for trading. Income and time. Or time and treasure, as some like to say. Now we don't trade the daily chart. We just go there to identify what the institutions are doing or not doing, and where important areas of support and resistance are. Every alert, whether it's Logic 247 or Concierge Trade Alert, is based on the 30-minute chart. These are the weekly trading zones you heard me talking about. When price drops to a zone, we expect support. When price rallies up to a zone, we expect resistance. Sometimes price will trade through a zone like it's not even there. Call that the slice. Only 3 things happen at a zone. 70% of the time, it's consolidation. 20% of the time, it's rejection. 10% of the time, the slice. When the slice runs out of steam, what typically happens is exactly what happened here. Price retraces right back to that zone it sliced through. See the wick? And continues in the direction of the slice. Over and over, again and again. When this black step line crosses blue and climbing, that tells you price is probably going to pull back to the BBC. And now that blue and climbing has rolled over and become red and falling, now the pullback to the BBC holds more often than it doesn't. Over and over, again and again. Pullback holds more often than it doesn't. But we know, see, when it pulls from below, it held and it held and it held. Where did the market find support? At the zone. Pull back. We know eventually price will trade through the BBC. That keeps the markets fluid and tradable. So while we're looking for long trades when price is above the BBC, once price gets below the BBC, then we start thinking about the short side of things. So even though the alerts came out late last night, somewhere in here, okay, price never, we got below the BBC, but we never pulled away from it. See how that candle is still touching? So this pullback, it held, okay? And it gave us a little lag here. Now, once this candle closed above the BBC and this candle opened, it opened at 42.94 and a quarter and ran up to 42.97 and a half. So from 94 to 97, it's 3 1/4 points. If your goal is 2 points for the day, well, you could have had it right there. Then we get into the perfect stack. That's when you've got price, the step line, blue and climbing, BBC. That's what I call the perfect stack for an upside move. And that's what we got. The open of this candle right here was 42.96, and it rallied up 7 points to the target at 43.03, and then it kept going. That happens. But was there opportunity here to get your goal for the day? Yeah. Here, yeah. Like this, just this one candle right here. Opened at 42.97 and ran up to 43.01. It's 4 points. If your goal is 2 points a day, it's a couple days' work. Do not focus on trying to knock it out of the park every day. If you can simply learn to take 2 points a day out of the market, the S&P, or 10 ticks in crude, or 10 ticks in gold, whatever makes you $100 per contract traded, that's all you need. Because as your account size grows, you'll add additional contracts with profit you earn in the market. It's all spelled out in the 24/20 blueprint. First you got to qualify to go live. 10 consecutive days in a row in sim where you reach your goal, 10 trades or less. Then the blueprint gives you the green light to go live with 1 contract. Now that's funded with your startup capital, the money you use to open your account. Your goal now that you're trading real money is to increase your account balance by $2 grand. Once you accomplish that, Blueprint will give you the green light to add a 2nd contract. But you only add 1 at a time, and you only add with profit you earned in the market. It is the perfect blueprint for building a trading business. It'll tell you when it's time to add number 3, number 4, number 5, number 10, all the way up to number 20. But you only add 1 at a time when it's time. You only add with profit you earned in the market. If you've got the discipline to follow that, well, you'll have to break a lot of rules to blow up another account. Just saying. Those 2 points, what does 2 points look like? From 42.80 to 42.82.
I'm here, D. I don't know if you're waiting for me.
Yeah, I'm waiting for you.
Oh, okay. Okay.
That little spot right there, guys. That's more than 2 points. So that's a real conservative. I mean, that's how much 2 points is. Now, 10 ticks in crude, 10 ticks in gold, whatever makes you $100 a day per contract. By the time you've earned the right to trade 5 contracts, this little spot right here is worth $500 a day. At 6 contracts, $600 a day. 10 contracts, $1 grand a day. The same 2 points that used to make you $100 a day. So while some people try to teach you, the secret is to get more points, we don't agree with that. We take a different approach, a simpler approach. Michael's going to give us a recap of what happened in the live training room. Then we'll trade live for 30 minutes on the TradingView platform. And then I'll come back and we'll recap every one of those other markets. We'll announce our winner of the tweet of the day, and we'll wrap it up with our good word for the day. Michael?
Thanks. Here we are. I'm excited to bring it over here into this.
Excitement is in the air.
It is. All right.
Despite all the stuff happening in the world. Okay, that looks real good. I'll be here if you need me.
All right, here we go. Good afternoon, everyone. Today is Friday, the 9th day of June 2023. Now, if you have not taken a free trial with us and you want to, go here to mytradingiq.com. Right here it says sign up for your free 5-day training now, 9:30 to 11:30. Click on that. Once you click on that, you'll be brought to a page where you just fill out a couple of forms. But if you're going to take the trial, you should go here and download the trading platform. Right? It's a very simple process. If you download a platform, if you just sign up for TradingView, that's great too. Either way, you're going to have to give us a username and give us the information that we need. Just follow the instructions in the videos. It's a simple process. Now, if you have any trouble with that, contact us. All right, email support@cfrn.net or support@mytradingiq.com. Either one of those, and we will get back to you. It'll take me 5 minutes to set you up, where you could stumble over that for days, and I don't want that to be a stumbling block for you. Right? So do that. Then the results today. Today started off kind of weird today. I'll explain that in a minute, but if you're going to read the spreadsheet, you have to read all the CFTC risk disclosures down at the bottom. Today is the 9th day of June, 2023. Today we made 65 ticks on the NQ. We lost 8 in the Russell. We lost 10 in gold, and we made 17 on the ES. So that put us at $397.50 per contract. And yeah, what Dwayne was talking about, if you can manage to make $100 per contract every day, that's all you need to do. This is what we've done so far. We had one day this month where we only made 100. And that was only because we ran out of time. It was our last trade that we made the 100 mark on. But today it took 18 minutes and 7 trades to actually, that's not right. Yeah, okay, that is right. 18 minutes and 7 trades to actually get the goal for the day. At that point, we're up $600 because we had 6 contracts on. And the goal was $100, and we had 6 contracts on. So we made $600 in 7 minutes. It took 7 trades. This is kind of the weird part. 6 of those trades were break even. That 7th trade, I got the goal for the day. It was on an ES trade. And it took a total of 27 trades this morning. So it took 20 more trades to get from $100 a contract to $397 a contract. So there was a lot of break-even trades this morning. There weren't that many stop-outs, but a lot of break-even trades. The stop-outs that we did have kind of hung. We had the stop-out on the ES, stop-out on. We didn't have a stop-out on the ES. We had a stop-out on the Russell. We had a stop-out in gold, and we never got back to positive on those 2. And then we had one stop-out, I think. We have a stop-out. Yeah, we had one stop-out on the NQ, and then we recovered from that back to 65. Anyway, on the month now, we're at $3,457. It's $12.55, so I don't have a lot of time. So we're averaging $493 per contract for 2-hour trading day. On the year, that puts us $53,264. Over 110 days, averaging $484. If you quit trading when you get your goal for the day and you had 1 contract a month, so far this year, you would have only had to work 33 and a half hours, and you would have averaged $1,510 per hour. Now, let's get into the actual trades. We'll start out here with gold. Now, I added a new feature last night per request in the partners meeting. I'll show you that in a few minutes. It's on the ES. I didn't put it on this chart. But in the golds, just quickly, we'll go through the trades that we did do. Start out with a break even, then another break even, then a stop out. And that was it on gold. During the break, there was one trade right here. There was a nice green arrow off the ribbon. That was gold. Let's slide this back over. Gold's got kind of flat now. The Russell, we had just a few trades on the Russell that we actually did do. And I think this was it right here. Well, let's go back to the very beginning. Okay, I might have had a break even there at the very beginning. Yeah, there it was. I had a break even right here at the very beginning. I missed this one right at the open, and I got a break even on that one. There were clearly some more trades in here that I didn't get. I don't know why I didn't get those, but I didn't. And then I got to stop out on this one, and that put me at minus 10, and then I got plus 2 ticks on that, put me at minus 8. During the break, there were some more trades through here that I didn't get during the break. There was a long there. I wouldn't have done that. Either one of those. Well, this is the one I would have done. Would even profit. I would have done that because it's a higher swing. I wouldn't have done any of those until right here. This was a ribbon trade. I would have taken that. Would have been good. I would have done that. I may have done that. Would have been a break even. And this right here would have been a trade. Okay, and that was it on the Russell. We ended up with minus 8 on the Russell. Now the ES, I'll show you the ES. I got 3 minutes left. Okay, the thing that I did last night by request from the partners meeting that I said I wasn't going to do, but I did anyway. You see in here we have all these black arrows and the green arrows, and the green arrows are the highest probability arrows. And in the meeting last night, Rico said, "Wouldn't it be nice if we only had the green arrows?" Well, I created a thing right here, a little checkbox. If you select green only, it gets rid of the black arrows and you only have the green arrows left. Okay, now it's not working exactly right because this arrow shouldn't be here. This arrow shouldn't be here, but these arrows were all right. So I'm still working on it. It's a work in progress, but most of the arrows are correct. Every now and then, like that right there should not be those should be black arrows. And see, they are black arrows. So it's changing some of them, not all of them. And that was something I was working on, right, that I created last night by request. Today on the ES, we had a break even. Then we had a plus 8. That's where we got the gold. Then we had a plus 4, I think. Yeah, and then we had another break even, then another plus 4 to get us to 16. Then a plus 1 to get us to 17. Okay, and that is what we ended up doing on the ES. Now I only have a minute left to do the NQ. I'll go over to this other monitor and make sure that I have that thing open over here so I can jump into it when I need to. I do. Okay. On the NQ, we had a whole bunch of trades on the NQ. And rather than try to scroll all the way back to the beginning because I'm running out of time, I just tell you we had a plus 3, then a plus 16 to put us at 19. Then we stopped out, put us at minus 1. Then we had a plus 12, got to 11, a plus 1 to 12, a plus 5 to 17, a minus 1 to 16, a plus 30 to 46, a plus 1 to 47, a plus 4 to 51, a plus 8 to 63, a plus 1 to 64, and another plus 1 to 65. So we had a bunch of trades on the NQ today. Now during the break, we can just look at this. We had a short here, green arrow short off the ribbon there, and then this would have stopped you out. This would have made a nice trade. Stop out, nice trade, break even. And that's, well, that was just the beginning. What happened during the break, I guess. If we scroll all the way back to the beginning of the break, we were at the beginning of the break. All right, a green arrow right here, worked out. Break even, worked out, stopped out, worked out, break even. Actually, wouldn't have done that one. So break even on that one, wouldn't have done that one. Worked out, stopped out, worked out, break even. And that's what we did during the break. All right, so it is time to jump into the live stream on TradingView right now, guys. If you have any questions about anything that I've said or done, you can email support@cfrn.net or support@mytradingiq.com. Either one of those will get to us. And if you haven't taken a free trial with us, go here to mytradingiq.com. On the homepage, sign up for the free trial right here. Right, that'll get you into 5 days, 5 consecutive business days of trading in the room in the morning. If you're gonna sign up for the free trial, you should definitely sign up for the trading platform. All right, give us your information so we can get that going for you. All right, now let me go over here, click a couple of buttons, and we'll get going in the live stream. We'll start trading live for 1 more hour today. We'll wrap up the week for us with that. And that, hit share. There we go. That should be shared now, and I'll hit start stream, and I'll make this fit in the window. Okay, so the stream has begun. Yes, the stream has begun. All right. And so now, anybody that's coming into the stream, or anybody that's starting to watch the stream right now, this morning we had a pretty good morning. We ended the NQ with plus 65, ES plus 17, Russell minus 8, gold minus 10. Right, we had 27 trades overall in the morning session. We had a lot of break-even trades. 6 out of the first 7 trades ended up being break-even trades for me. Some of the guys had gotten the goal for the day because they let it ride a little longer than I did, but I was being careful and trailing my stop. I just wanted to get the goal. Eventually, I did get the goal on a single ES trade after I think 18 minutes it took me this morning. All right, so over here on the NQ right now, you can see on the NQ, we are streaming, right? Yeah, we are streaming. You can see on the NQ that we've just hit the ribbon and we're looking for an up close right there. An up close off the ribbon would be a trade by itself, but if it pulls it out of the oversold right here at the same time, then that means we're going to have a green arrow. Now, the green arrow is the highest probability trade. It's going to be 48.50. Now it's going to be 48.50 up to 52.50 plus a tick. So it'll be right there, 52.75. Okay, and they're just triggering me in and it slipped me a few ticks, but now the trade is on. It was a green arrow coming up out of the ribbon. Off the ribbon, went up out of the oversold. So now this is set to automatically bump my stop. This is a 20 tick stop on a 16 tick range chart. So it's automatically set to bump my stop to break even after break even plus a tick, actually after I get 8 ticks in profit. And there's a profit target up here at plus 30 ticks. So I'm just gonna let this thing work by itself right now and let it do its thing. These other markets don't have a trade right now, so we're just gonna have to wait it out and see if they give us one. Right, the NQ was the first one to give us a trade. Now, if we get 8 ticks in profit, and 8 ticks is right here, it's going to get up to this level right here. When it gets there, and it should get there right now. When it gets there, right? When it gets there, now it got there. It should bump my stop to plus even, break even plus a tick, but it didn't actually get plus a tick, and it didn't do it right on time. So this automated stuff is, well, it's handy, but it's not precise. You see how I had to move my stop a little bit to get it right. Now this is plus 30 ticks up here, so we're just going to lock in another 8. So that's 16. Right, it just gave me the whole plus 30 right there. Right, so that is our first NQ trade, and that was a green arrow trade. The green arrow are the highest probability trades. You get to watch me all the way through on that. Val, I don't know if you're watching, but that would be a good one for the recording later on. Let me put this on here. Okay, put that on there. Now I'm going to shut that automated thing off and turn it back on. I think it needs to be reset every now and then. Okay. All right, so that was our very first trade, and we don't have anything else ready to go yet. Now, every trade you anticipate is going to put in a higher swing like that one just did. Okay, you anticipate that it's going to put in a higher swing. And we have the higher swing. We've gotten all the way up to the outer band right now. And so we anticipate it's going to pull back down and give us another shot at it. You know, the markets are always doing the same thing, right? They're always doing the same thing. They're going up and down and up and down. And now they've gone up and now they need to come back down. So what we want to do is get in down here and get out up here and get in down here and get out up here. So we need this to finish going down so we can capture the move back up. Okay. That's what we're looking for. All right, let me go over the rules here really quick so you understand why I did what I just did. If you go to TradingView.com, the rules for the trade setups, what I just did was a long trade here with the slingshot. Okay, the black line in the ribbon must be on the bottom and in the green or silver, and the lead line in the slingshot must cross oversold. All right. So if we go back here and we go through those pieces, the black line is right here, it's in the green. The lead line down here in the slingshot, the black line, must cross the oversold. So if that happens, if it touches the ribbon and that happens, that's going to give you the green arrow. Okay, if it comes off the ribbon and that happens, that's going to give you the green arrow. If that happens and it doesn't touch the ribbon, you're going to get a black arrow. Okay, so the green arrow is your highest probability trade, and that's what just happened. Now, when you enter the trade, right, there's 3 steps to a trade: the entry, the risk management, and the exit. When you enter the trade, that's this part. We got that exactly right. Now it's a 16 tick range that the NQ is operating on. So it starts out with a 20 tick stop that trails to break even after 8 ticks in profit. Now I have it on the automated thing, and you can see the automated thing didn't exactly work in that one. It bumped it. It looked like it bumped it too soon, and it bumped it to minus a tick. So I manually moved it up after that to get it to the right place. And then I trailed my stop up to plus 20 ticks, I think at one point, or 16 ticks. And then it just hit my 30 tick target. Okay, so when you look at the trade rules down here, the risk management part, the automated part of it didn't work out that well, so I just stepped in and made it work the rest of the way. But the trade exit, you look left for prior swing high for an area of support resistance. The entry was here, so I was thinking it should at least get up to here. Okay, from our entry, it should at least get up to there, and that was enough to hit our 30 tick target, I think, right? If we entered here, 52.75, it went all the way up to 58. Almost. I had to go through that a little bit to get to the 30 ticks. All right, it's setting up again right here. Now, if we pull out of the oversold, right now we're going to have a black arrow. All right, if we pull out of the oversold because we're not touching the ribbon right here. So we have, let me bring it over and see if I can do this again. The low on this bar is right here at 60 and a quarter. So it'd be 64 and a quarter plus a tick. Okay, 4 points plus a tick is what you need for this. Right, from the low of the bar to the high of the bar, there, it just entered me in. Now that is exactly right, and now it screwed up the whole thing again. You see how it has an 11 down here instead of a 6. So I'm just going to cancel that, and put a 6 down here. Put a 6 down there. Okay, so now I'll just have to do it manually. All right, if we get to 8 ticks in profit, then I'll bump the stop to break even. It's going to get up to this level right here. I need to bump the stop to break even. Okay, and that should be 20 ticks away, I think, right? This should be, I don't know, 20 ticks is 5 points, so it should be at a 0.75. But either way, if it gets up to here right now, there, I'm just going to bump it all the way up here to break even right now. Okay, and now my profit target, I would anticipate it's going to get to the swing. I'm just going to lock in 2 ticks. I anticipate it should get up to the swing high and go through it right here. So I don't have my normal 30 tick profit target on, so I'm just locking in a couple of ticks on that one. The automated thing didn't work out so well on that one, but that's why you have to pay attention to those things. You have to step in every now and then and take control of it. The whole set it and forget it thing doesn't always work. But we ended up with 2 ticks, and we did get up to the prior swing high. We should exceed the prior swing high now. Remember what I said just a couple of minutes ago about it being markets going up and down and up and now down. And this is the prior swing high that it should go up above right there. Okay, so I went up too far in this. This is the prior swing high right here. And so it's going up above it right now. It's doing everything that it should, and it's setting up for another trade. Okay, it's setting up for another trade right now. Okay, if you go back to Wednesday's lesson plan, if you guys, anybody was in the trial or in the room, Wednesday's lesson plan dealt with leg lengths. And you can see right here, we're getting some leg lengths. Go over at the Russell right now. We're about to have a trade there on the Russell. Okay, now I gotta undo this so it does not extend. Okay, so this is our leg length right now. And this is the leg length that it's trying to copy right now. Okay, watch the Russell right here. It's going back down to test the ribbon. We don't have anything on gold yet. We don't have anything on the ES yet. So back in here. If anybody has any questions, about anything, type them into the live stream chat. Okay. If you want to see any other symbol, just let me know. Okay. The Russell is about to have a trade right here. It hasn't hit the ribbon, but we're oversold. Okay, this is after a trend change, but this is a pretty deep pullback. So I'd rather see it hit the ribbon and then give us a green arrow on the up close while it pops onto the oversold, but I don't know if it's actually going to do that. If it closes up on this one right here, it's going to give us a black arrow if it pulls onto the oversold. Okay. All right, so we did put in a higher swing here right now, and it's pulling back. It hasn't pulled all the way back yet. This has dropped down just a little bit more. Now the high on this is 68.8, so the low is going to be 68.0. I'm sorry, 68.1. So there's a chance that this could come down, hit the ribbon, and pull out of it and give us the green arrow trade. I'm not going to get anything here on the NQ the way that it is because it hasn't gotten into oversold and it hasn't gotten into the ribbon. Okay. Any questions? Anybody? See the high of this bar being at 68.8. It can go as low as 68.1 without closing down, right? Because there's 7 ticks in this. So right now, okay, so now it's up to 69.0. So now it can only go down to 68.2, which would still touch the ribbon. Okay, it's not a trade setup yet. Neither is the gold, neither is the ES. The ES had a direction change right here, so it needs to have a deep pullback. Okay. That's all we need. It's just going to pull back to right here. Give us, all right, the NQ is pulled all the way back and touched the ribbon. Now we're oversold and it's touched the ribbon. We could get a green arrow out of this. 61.25 to 65.25 plus a tick. 65.50 is what you'd be buying right now. Let me turn that thing back on. 65.50. And there it is. That's the green arrow from 65.50. Okay. Now I'm jumping in right here. Here, I think it's doing it right now. I just jumped in right there, and my target is up here at plus 30 ticks. My stop should be down here at minus 20 ticks. And hopefully it's going to work correctly this time, the bump to break even plus a tick. That's what it should do. And it didn't. So I'm going to drag it up to break even right now. Okay, it should have bumped to break even plus a tick a minute ago when it hit this number right here. So I end up with a break even on this. Maybe I need to restart T or something like that. It should have bumped it to break even plus a tick there. But anyway, on this green arrow, we ended up with a yellow. Yellow. All right, so over here on the Russell now, 68.0 up to 68.8 is going to be a long trade. Okay, and it just filled me at 68.9. Now the NQ is starting to move. On the Russell, we just need 4 ticks in profit to bump that stop. And I think we just 1, 2, 3, 4. We just need to go up 1 more tick right there. I think it just did a second ago. I probably should have bumped that already. But anyway, the NQ over here is starting to work out. And I think the Russell, I think, is going to get up to right here at 70 even. Right here is what it's looking for. Okay. Now the DOM is suggesting it's actually the DOM is suggesting it's going to pull back exactly to our stop. That's what the DOM is suggesting right now. So I guess I should have had my stop at break even when it went 4 ticks into profit. I get in 68.9. It had a high. I guess it didn't get to that point yet. But over here on the NQ, we want to exceed this level right here. We want to exceed this level and finish that leg length. Okay. And on the Russell, the leg length is. On the Russell, the leg length looks like this. Okay, this is what your leg length looks like here. Like this pullback is a little deeper than the normal pullback, but this is what your leg length looks like. Right, so that would be fine if it managed that leg length. Even the swing high would be good. 1870, right up here. That'd be 11 ticks right there. Okay, there. Now that is 4 ticks. Did you see that? I just got my stop on in time. I just got my stop on in time to get taken out of break even. Wow, that was quick. That was quick. Yeah, I almost got taken out of break even and then put into a short. Because so if you go back and look at this slowly, you'll see that I dropped my stop at break even. It came down, nailed me at break even. I still had my other stop down here that I had to go and get rid of. And I had to go and cancel that one. All right, so over here on the NQ, we did not really put in a higher swing, so I'm not really interested in taking this trade off the ribbon right here. Okay, we're consolidating here because we didn't put in that higher swing. It's just consolidation, so I'm not going to do anything with that right now. Okay. All right. Okay. SZ, do you want to look at anything else? Do you want to look at any kind of equity, forex, ETFs, stocks, anything? this is futures. This is what we do with futures. You know, we're very good with our futures because that's what we've been doing for over 10 years. One of the things that if you just came in and you just started watching this, then first of all, to take the free trial, you just go here to mytradingiq.com. Just sign up for the free trial right here, right? If you do it now, and you obviously have a TradingView ID, and you are a Pro Plus on TradingView, that's great because with TradingView you can get with Pro Plus you can get charts just like this. Okay, so if you sign up for the free trial, and while you're signing up, there is a spot where you can give us your TradingView ID. If you do that, we'll enable your indicators today, within the hour. If you go there and sign up for the trial, it'll enable your indicators. And when you do that, if you go here to mytradingiq.com, you click on Trade Rules right here, and you click on this right here. After we enable your indicators, if you click on this, that is this link right here. So you have an exact copy of this layout as it is right now that I just saved it. It'll be an exact copy of this layout now that I just saved it. It'll even have these little arrows down here that I drew in. Okay. Yeah, and if you need any help with that, don't let the whole TradingView thing or any platform, what I'm trading on right here, this is DT Pro. This is what I like to trade on. TradingView by itself, it has its own DOM over here you can trade on. That's a layer on top of all the other layers that are underneath there. I'd rather just trade straight off my DOM. So don't let any trading platform be a stumbling block. If you have problems, give us a call. It'll take 5 minutes for us to get you going. I'll set up a meeting and do it on your desktop for you, as long as I'm available. But if I'm not, then Dwayne can do it. Valerie can do it. Bert can do it. There are other resources besides me. All right, so it's 119. So far we've had 130 tick win, one tick win, one break even, and one break even. So those other ones were over here on the NQ, and we had one break even over here on the Russell. The other markets just aren't giving us anything. I want to see the ES after a direction change. Now, the direction change is right here. It's evident when the long-term direction, these outer bands are going down, and then they switch and they start going up. That's the direction change. Down here in the ribbon, everything below the black line, and then it switches and everything's above the black line. That's a direction change. So after a direction change, I like to have price come all the way back down and touch the ribbon before it starts moving up away from it. That way it's bouncing off support. Okay. That's the difference between a black arrow and a green arrow. Green arrow is bouncing off support or resistance, like this one over here, like this one over here. Okay, so we're oversold right here, right now. We're touching the ribbon right now. So if you get an up close on this, yes, this is exactly what I was just telling you I want to see. 302.50. Let me do this. Joe, I don't think you're watching right now, but if you are watching, you'd be down here right now. The low of the bar is at 302. Add 8 ticks to that. It's going to be 304. Right click in the green. That puts a buy stop limit order on. Now this bar, because it's a range bar, I know exactly where the top is going to be. If the bottom stays where it is, the top is going to be right here at 375. All right, you know that ahead of time. So if it closes up, it's going to be a trade, and I want to be in it. So I have my buy stop limit 1 tick above where the bar is going to close. I know that ahead of time because these are all range bars. The maximum that it can be is this height right here. And the only way you're going to go to the next bar is to exceed that height. So if it exceeds it to go to the next bar, it's going to trigger me in right there, or maybe right there. But it's going to at least trigger the trade, which it hasn't done yet. Okay. So right now, 402 up to 403.75. It's got all 7 ticks range in the bar. So this bar is either going to close down here at 402. I'm sorry, 302, or it's going to close up here at 3.75. That's what I say. It's going to close. Yeah, it's going to close down here at 43.02, or it's going to close up here at 43.03.75. It's going to do one of those two things. To get to the next bar, it has to do that. Right? That's how range bars work. It's to exceed the current range in the bar to get to the next bar. There it is. It exceeded the range of the bar to get to the next bar. It closed up, and I wanted to be in the trade here. It slipped me 1 tick, but that's okay. And it automatically put my stop 10 ticks away. 10 ticks away. Right, so the rules already here. Now, this, let's go back here and just look at this. This was an entry off the ribbon without the slingshot. So these are the rules for that. A long trade without the slingshot. The black line in the ribbon must be on the bottom and in the green, and price must touch the ribbon on the pullback. Okay, so the black line in the ribbon is on the bottom and it's in the green, and price has to touch the ribbon on the pullback, which it did do. So the entry part is complete. Okay, I did that perfectly. Now we have to do the risk management part. Okay, in here in the risk management, these are 7-tick range bars. All right, so it says the 7-tick range bar, every trade starts out with a 10-tick stop, and you trail the stop to break even after 4 ticks in profit. So the 10-tick stop is in place. Now we haven't gotten 4 ticks in profit yet, so we can't trail it to break even yet. This number right here is where it's trying to get to. So if it gets to that, it's probably going to give us the 4 ticks in profit that we need, but it's got a whole bunch of numbers down here that it's attracted to too. So this could turn against us, and if it does, it does. You know, as you've seen, not every trade is going to be a winner. You know, not every trade is going to make money, but you know, most of the trades do, and that's all that really matters. Okay, it's not about, you know, there's people always ask about winning percentages, and for me, it's not about winning percentages. It's about how much money you make at the end of the day. Like this morning to get my goal, you know, it took me 7 trades to get my goal. 6 of those trades were break-even trades, and so from a winning perspective, out of 7 trades, you know, it was like a 16% winning perspective, but you know, 1 out of 6, 1 out of 7 actually, it's less than 16%. But from a profit perspective, it took me 7 trades, but I made $600 in 18 minutes. So it was, you know, if you look at this part of the spreadsheet right here, this is what I did this morning. Today it took 18 minutes and 7 trades to get to $600. And yesterday it took 3 minutes and 2 trades to get to $1,560. So this is what happens when I get my goal for the day. How many minutes, how many trades, all that. So it's not about the percentage of wins. You know, people ask about that a lot. You know, what's your winning percentage, your winning rate? It doesn't really matter. What's your profit? That's what matters. Okay. But yeah, we've been doing this stuff for a very long time, very long time. That spreadsheet, the spreadsheet here has our daily results going back over 10 years. 10 years of daily results. Go find that somewhere else. Good luck. So we anticipate that the CS is going to get up to here to 4306.5. Okay, 4306.5 is where we anticipate this is going to go. So do we have any numbers there? Yeah, the numbers are starting to pile up here on the upside, on the bullish side. So this is probably going to work out for us. It should get up at least to the swing high right here. Now we haven't had a chance to bump the stop to break even yet. It hasn't gone far enough for us to bump the stop. It's going to get up to 5 1/4 to bump the stop to break even. So right now we're just hanging. The NQ has gone completely flat over here. The Russell, same thing. And gold is pretty much the same thing. And it's 125. So it looks like we're going to have, this will probably be our last trade of the morning here, or the afternoon, or whatever. This session. But this is like my 31st trade of the day. All right. Just need a little push. What are you guys out there? Good feel like buying. You only have to buy about 400 cars to get my stop to break even here. Yeah, thank you. Thank you. Just another 100, 135, and I'll be able to bump my stop. All right, that was a nice try. It's going to go. It's going to get up into these numbers right here. I'm pretty confident that it's going to get up into those numbers right now. And we're going to get our stop to break even coming up. Just a second here, I think. So I'm following the rules right now. You know, a lot of people would put the stop at break even right now, but I am waiting until it actually meets the requirement. It's got to go to that 4th tick for me to meet the requirement. Oh, that was so close. It's a struggle right there. Okay, so we're waiting a little bit longer. All right, well, while we're waiting for this, we don't have anything developing here. We have a higher swing coming in over here on the NQ. Here we go again. We have a higher swing coming in on the NQ. And we can go back down to the ribbon for that one because it's a direction change also. One more tick up there. Come on. So while we wait, I have a feeling it's going to run pretty quick once it breaks through here. Oh, so close. There it goes. There it goes. Stop to break even. Okay. Patience. All right. So now we got to stop to break even. So now we've done. Right. This is what I meant about it running pretty quick. The first thing that says in the in the exit criteria, look left. So 6.5 is one good spot. But then it says to look at the DOM to find other places it should go. The other place it should go is right there at 7. Okay. So I'm gonna lock in one tick on this so I can wait all that time for absolutely nothing. But 6.5 is the swing high, and 7 is where it should have gone to. Right now, if anything else opens up, when it goes up again, if it goes up again right now, I'll bump that some more. But 7 right here is what it's trying to get to. I'm gonna lock in 2 ticks now. Okay, and we'll just wait. So let's go through the rules again. Okay, let's go look at the rules. So now we've done this part exactly right. We've done this part exactly right. And now we're doing this part down here exactly right. 6.5 was the swing high. That's this. And 7 is this right here. Now 7, I'm going to pump all the way up to there right now because there's more information available to us now. So I'm going to lock in 4 ticks on this. And now we have more information available to us as price starts moving up the ladder here. Okay. So 7 was the first spot that I thought it was going to get to. After it hit that swing high, 7 was the first spot. There, it's hit 7 now. I'm going to lock in some more on this. Okay, now this is the next spot that it should get up to. Above that, it should get up here. Okay, but we had 8 ticks locked in there. So we're out with 8 ticks. Okay, so that right there, I guess that's how we're going to end our sessions for the week, I think. That was a pretty thorough walkthrough of how to do the trade. Get in here, the green arrow. Once you get in, you move your stop to break even after you get 4 ticks in profit. You have a 10 tick stop, move the stop to break even after 4 ticks in profit. Look left for the first profit target, then learn to read the DOM for the next profit targets. 7 was the first one after, and just a little bit higher was the next one after the DOM. Right, so it's done all of that now. All right, so if you just watched all that and you haven't taken a free trial and you want to take a free trial, we do this stuff 2 hours a day, every business day from 9:30 to 11:30. The trial, I'll give you the information for that. It's right there. The trial is absolutely free. You just go here to mytradingiq.com, click on this, sign up for the trial right there. Okay. And when you take it up, give us your TradingView username and we'll set you up with your indicators right away. All right. Your trial is good for 5 business days. So if you sign up for the trial right now, today on Friday, you'll be good until next Friday. Okay, we'll get your indicators going so you have them over the weekend. And then it'll just be so much better for you. Just kidding. But it might be. But look, remember, it's going to keep going here. The S is going to keep going. You see this right up here at 9.5? It's going to keep going. Price is going to keep going. Let's keep marching up right now. I've run out of time. So I'm going to wrap it up with that good thought. If you are not following us on TradingView, hit the follow button, all right? And start following us and you get notified when we do things like this. But that is going to be it. All right, let me get rid of that. And this, and that's it. With that, I wrap up the live stream. Thank you for coming, everyone. Hope you all have a great weekend, and we'll be back on Monday. Dwayne, you want to take it out to fabulous Phoenix, Arizona? Studio A.
I'm ready. Recap of the morning session.
Today it took 18 minutes and 7 trades to get to $600.
Great way to end the week.
Yes, yes, it was a very nice way to end the week. And that's a good one to record, man. I think she recorded the whole thing.
Okay, guys, it is 1:30 p.m. Eastern, and a new segment we added to the show this week is our tweet of the day. And today's winner, he's on a roll because this is his second win for the week. Travis in Flint. My applause button didn't work.
No, it
Oh
did
well.
not work.
Okay.
Here,
There you go. Anyway. Now, you're probably thinking, well, Travis must be your friend. I don't know Travis. Never met Travis. However, we do bump into each other on Twitter, and he posts some interesting stuff. Often things that I myself am thinking of. So this post caught my eye today. The U.S. just sent another $2.1 billion to Ukraine, which will provide critical air defense and ammunition capabilities. Money is being funded using the Ukraine Securities Assistance Initiative, also known as your tax dollars. Ukraine also received $2.6 billion last month. So $2.6 billion last month, $2.1 billion this month. If I'm not mistaken, our previous president was trying to get $5 billion to secure our southern border. Now, he couldn't do that, but your taxpayer dollars are just flying out the door. Now we know why the news about Trump came out yesterday. He didn't want struggling Americans to notice another $2 billion going over to Ukraine. This isn't just Democrats. They couldn't get away with it without the help of Republicans. This money laundering scheme will never end. And my reply was simply, no worries. The Fed will simply crank up the printing machine and continue to raise interest rates on tax-paying Americans. It still won't work.
Here.
No, I'm just...
Boo.
I was playing with it earlier. Maybe if I open it back up. There we go. Okay. I feel better now. Yes, Ricardo. I commented on another tweet this morning where, well, you know what? I don't want to get too political. Let's just stick to the trading, but I agree with what you just said. Okay. Now, at the beginning of the broadcast, for those of you that may have shown up late, I showed you the CTA alerts that were sent out late last night because I had a commitment yesterday afternoon. Normally they go out by about 6:30 usually on average. It's a static report, okay, good for the entire session. So because this broadcast is open to the public, if you're not a member or a trial member, you did not get these targets. So I want you to have an opportunity to grab a screenshot, okay? And again, I was late last night, 11:20 p.m. Eastern. So everybody got a screenshot? Great. Okay. Now, to the charts. I first want to pop back to the daily for just a minute. Now, for those that you were tuned in earlier, we talked about why the market stopped where it stopped. It hit the 38% fib extension. We've been expecting that because as long as price is above the BBC, we anticipate higher prices, especially if price is above blue and climbing and the step line. But we hit that 38% fib extension, ground to a halt. Now, at the beginning of the broadcast, we had run all the way up and run all the way back down. We had a little tiny doji right here. I said institutional buyers have hit the pause button for the moment. I said it's possible they'll unpause their buying as we head into the close. So we are up a little bit from where we were when I showed you the daily chart about, I don't know, an hour and a half ago or so. That's what's happening, okay? It takes financial commitment for price to rise. All it takes for price to drop, as you saw earlier, is for institutional buyers to stop buying. If they hit the pause button long enough, then the short sellers come out of the woodwork and drive the market down. Okay? That hasn't happened yet. What will be very interesting is to see where we close this session. Okay? When you're on a 30-minute chart, it's important where the candle closes. On a daily chart, it's important where the candle closes. For all we know, we could go right back to the high of the day, or we could drop below support. Support is at the low of the day, and the low of the day is where we would expect there to be support, at the step line and blue and climbing. Support below that is the 24% fib extension. We traded sideways for 1, 2, 3, 4 sessions, and then just like last Friday, which would have been this day, popped up a little bit. Okay? So again, because there's green, there are some institutions buying. Now, to the 30-minute charts. We already covered this, but I'll be real quick. This is where the market opened last night. Pull back to the BBC. The pullback holds more often than not. In this one candle, you could have gotten your goal for the day. Or in this candle, or in this candle, or in this candle, or in this candle. Then we hit the target. Now, when price drops to a weekly trading zone, we expect support. When price rallies up to a weekly zone, we expect resistance. 70% of the time, when price reaches a zone, it's going to consolidate. 20% of the time, it's going to get rejected. And 10% of the time, it will slice through the zone on the 30-minute chart like it's not even there. When that happens, price will typically retrace to the zone it sliced through, which it did to the tick, and then it continued in the direction of the slice. Only 3 things: consolidation, rejection, slice. This is what you'll see 70% of the time. Okay? Now, when you become a lifetime member, we want you to become self-sufficient. We want you to use the alerts to learn how to trade. It's not just a free lunch. I mean, it's not, the idea is not that you just trade the alerts so that you don't have to learn how to trade. Because do you really want to spend the rest of your life depending upon somebody else to tell you when to get in and when to get out? Or do you want the freedom of being able to just look at a chart, scan across multiple charts until you find a true window of opportunity? Hopefully, your goal is the same as our goal, to make you self-sufficient. Now, we have a very, very vibrant trading community. So once you've got it nailed, we do hope you'll stick around so that you can help the next new person who once stood in your shoes. Okay? So What's price doing now? It's pulled back to the BBC. Again, the pullback held. It holds more often than not. But there's been a change in the dynamics. Blue and climbing. See, on the way up, we had the perfect stack. Price, step line, blue and climbing, BBC. But when that step line crossed the BBC, that told us to expect a pullback to the BBC, which we got. Okay. In doing so, blue and climbing became red and falling. So now we've got resistance times 2. When price moves up to a zone, we expect resistance. Remember, when we drop to a zone, support. When we go up to a zone, resistance. Red and falling. When price moves up to red and falling, we expect resistance. When price drops to blue and climbing, we expect support. Okay? So, what do? Well, right now, nothing. Because you don't know if this resistance is going to hold or not. You're going to become a trader who trades for a living, then you're going to have patience and self-discipline. Okay? Now, I made this 2-point window of opportunity earlier. Because that's all you need is 2 points a day. $100 per contract. So whether you get the $100 per contract from crude or gold or silver or the euro or bonds or soybeans, doesn't matter. $100, $100. As you increase your account size, the blueprint's going to walk you through adding additional contracts with profit you earn in the market. So let's take this little 2-point window right here and put it in a proper place. Okay? So if price overcomes red and falling and overcomes the zone, which is 4310/11, then a great window of opportunity would be 4315 to 4317, and that's your goal for the day. But I want to trade now. Okay. Yeah, that's why 9 out of 10 new traders fail. They just want to click the mouse and make money. Well, if you're going to be a consistently profitable trader over the long haul, then you're going to learn to wait. You're going to learn to be patient. Oh, sure, you can take a shot. Well, it'll probably break through. So let me just go ahead and get long. Huge mistake. Don't do that. Okay? And if you struggle with that, I spoke with someone this morning in a mentoring session who was honest with me and shared with me, and that's what the mentoring sessions are all about. He says, when I get stopped out on the first trade, he goes, I have a hard time not clicking the mouse on everything that moves because I just want to get back to break even and get back to, and get positive and get my goal for the day. He says, I don't have a problem being patient till I get stopped out. Once I get stopped out, then I get very impatient. And I just want to quickly recoup. Got to overcome that. That's part of the process. That's why you need someone to teach you how to do the job. The gentleman that I was in the meeting with this morning, he's been with us for a while. But because he's a lifetime member, he has lifetime access to unlimited one-on-one mentoring. He had 5 great days in a row reaching his goal. Then he stubbed his toe. So what did he do? He did the right thing. He contacted me and said, hey, can we have a mentoring session? And I said, of course we can. And we did. And he actually was able to reach his goal for the day during the mentoring session. Because I made him the presenter. With my guidance, he actually put on and took off the trade. And that's what we do for all of our lifetime members. And if you take the free trial, we'll actually do it for you during the free trial. So if you find some other place that offers what we offer for as little as we offer it for, please let me know. I'd love to check that out, because we go out of our way to not only be transparent, but to provide you with things you won't get anywhere else. Okay, so see, price is working its way through. That's fine. Has it proved itself yet? No. There's still 13 minutes left in the life of this 30-minute candle. Well, what if price just races up through that little window you put up there, and I get left out? There'll be another trade, okay? What you should hope that happens is that this candle closes, above the zone, above red and falling, and then the next 30-minute candle opens in 13 minutes, almost 12 minutes, and starts printing green, and then boom, you're done for the day. We'll come back and have a look. But let's go to these other markets. The Dow. Here's where we open. We pull back to the BBC. We never really pulled away. These candles are all still touching. Could you have got your go for the day on that red candle? Yeah, you could have. Is it a trade I would have taken? Probably not. Why did price stop dropping where it stopped? Look left. Here's your answer. That was defined as an area of support yesterday. So anybody that was shorting the market, they already knew they were coming up on potential support. So they stopped selling. They took their profits, and that caused price to. Price always reverts to the mean. In our case, the mean is green. We just call it the BBC. So on this candle, we've got our perfect stack. Price, step line, climbing, BBC. Looking left. You want to get above these obstacles here. So maybe you took an entry at 33,850. At 33,870, that's your goal for the day. Did it continue on another 30 points to the target? And then did it continue even further? Why to stop there? Well, we'd have to scroll way back. Way back. Because it's been a long time since we've been up in this area. But I promise you, there's a reason. So, there's a doji. Now, not every doji is a turning point. But at many turning points, you will find a doji. Okay? That represents indecision in the markets. This candle opened at 962. It closed at 962. In other words, candle opened and it either ran down and then ran up, or it ran up and then it ran down. But the point is it closed at the exact same price it opened. That often, especially in the proper context means we had a nice up rally. Okay, 33,830. That's almost $600, over $500 per contract traded. Okay, so profit taking makes sense at that point. Oh yeah, and even someone who's bullish the market and they've bought, when they are ready to take their profit, they become a seller. Sometimes you buy to enter a position, sometimes you buy to exit a position. Sometimes you sell to enter a position. Sometimes you sell to exit a position. So if you bought down here, up here you became a seller. Wherever you chose to exit the market. Doesn't mean you're suddenly bearish on the market. It just means, okay, I bought this stuff. Now I got to sell it. That's the beautiful thing about futures. There's always somebody waiting to take the other side of the trade. If you have experience in equities, you might buy a stock and it makes a nice run up and now you want to exit, but there's got to be somebody, the stock just ran up 50 bucks. So a whole lot of people are looking to take profit. How many people are there going to be willing to buy after a 50-point run up? Well, only new people, inexperienced people, people who have not been taught how to trade. You don't have that problem with futures. There's so many reasons we like futures. They trade around the clock. I mean, just so many reasons. I won't go into them all. But there's always somebody to take the other side of the trade. And if it's in the day session, there's rarely a spread. Bid and the ask are a tick apart. So after the doji, price pulls back to the BBC. Remember, the pullback holds more often than not. So off we go again, up to the target. But now, blue and climbing, that perfect stack is no longer the perfect stack. Now, red and falling represents resistance. Okay. So what do I do? Well, you wait. There's more waiting in trading than there is actual trading. Waiting for the right opportunity. Okay. From 33,930 up to 950. Goal for the day. Price takes out this current high. Then we would expect price to attempt to at least get to this area where resistance was last defined. So we're not trying to catch the whole move. We're not trying to pick tops or bottoms. We just want to take a small slice out of a logical move in the markets. That's it. No secret, no magic. Keep in mind, price is struggling with red and sideways, and unless buyers get busy and start buying, then we're not going to make it up to this window. We're going to roll over and head lower. Russell. Here's where the market opened. Notice the pullback to the BBC. It held. That's how price moves in legs. Leg retrace, leg retrace, leg retrace, leg retrace, leg retrace. Now the pullback holds more often than not. You can see that plain as day. Eventually, price will trade through the BBC, and that keeps the markets fluid and tradable. If we scroll back just a little bit, on June 6th, today is the 9th, on the 6th, we got a bullish cross. Red and falling turned to blue and climbing, and then blue and climbing crossed the green line. That's what we call a bullish cross. And so, what did the market do all day? It rallied. What did it do the next day? It pulled back to the BBC, but the pullback held, and it kept rallying. And then it went sideways, and then we got a bearish cross. Price dropped to support. And then price hit the target, hit the zone, found support, sent price back up to this area right here where we would expect potential resistance. And price got below the VBC again, hit the short target, traded through the short target, and now it's consolidating right here for 1, 2, 3, 4, 5, 6 30-minute candles. Why there? Here's your answer. So if you are in this short trade coming down, once price got through the zone, was there room? Let's say you entered at 1872 down to 1870. That's your goal for the day. So you're in, you're out before you hit this area where you expect there to be support. See, this is what we teach our members, all this stuff. And there really isn't all that much stuff. Our methodology and strategy is so simple. Many who've spent hundreds of thousands of dollars on stuff and gurus and seminars trying to learn how to trade, once they become a member and see how simple our methodology is, sometimes they get mad. Not at us, because we've saved their bacon, because they were almost out of bacon. And I hear all the time, I can't believe how many years I struggled and tried this and tried that and went to this seminar and flew across the country or flew around the world and you've just made everything so simple. Well, I'm going to tell you, that took a lot of hard work, because when Michael and I first started trading together back in late 2005, early 2006, we were the king of indicators and oscillators, and we owned everything on the planet, and we had it all on the chart at the same time. And when we ran out of stuff to buy, we started rolling our own. But thank God we figured out that one more thing was not the answer to the problem. Sometimes less really is more. This is a pretty, most traders would look at this and go, well, boy, that's a bare bones chart. That doesn't tell you anything. It tells you everything you need to know. Well, it doesn't take into account the trend or the tricks or the Kellner bands or Bollinger bands or the RSI or the MACD or the stochastics. No, it doesn't. I'm not knocking any of those things. I'm sure they all do exactly what they were created to do. Unfortunately, what they do is they usually just confuse people. One of the episodes, if you scroll back on the YouTube channel, why too many indicators and oscillators can harm you rather than help you. I spoke on that topic for about 15 minutes. One day last week, I believe it was. YouTube.com/CFRN. Just scroll through to you see that title. Fast forward to the part where I'm talking about that. It's probably about 15 minutes into the broadcast. Everything you need is right here in front of you. The only thing you aren't seeing is this. Now, Michael likes to use a 7-tick range chart. I like to use a 10-tick range chart. If my 30-minute ES is telling me, I should be getting long, then I'm going to come over here. And as this thing turns blue, the cycle turns blue and starts to climb, my bias line turns green. Man, all I got to do is get long. Get long here. I could get long here. This candle opened at 43.02 and a quarter. Opened at 43.02 and a quarter. And this candle hit 43.0475, and then it went on to hit 43.0650. If I had entered on that candle at the open, 43.02 and a quarter, Where would my stop be? $42.99, half maybe. But I would have taken advantage of all this because I know price travels in legs. So we got a leg, a retracement, a leg, a retracement. Trying to put together another leg, but the failure to put in a new high. See, after this pullback, we put in a new high. So I'm not confident in the upside till we put in a new high. We got a double top right here. Now, down here on my slingshot, I'm still blue. And the green line, if it hooks up and crosses that bias line, I just buy the market. Okay? I'm only looking for 2 points. So from 43.10 to 43.12, the stop loss at 43.08, risking 2 points to make 2 points. And that's all you need, is 2 points a day in the S&P. 10 ticks in crude, 10 ticks in gold, 20 points in the Dow, because the Dow only pays $5 a point. The Russell pays 50 a point, just like the S&P. Now, we've already traded through the short target, so is there nothing left to do with the Russell? See this area right here where the bullish cross took place? We'll conservatively call that 1860. If price takes out this low at 1862, I'll trade 1862 to 1860. Goal for the day. The market defines support here. The market defines support here. So once this support is broken, I expect price to trade to where support was previously defined. Does it do it every time? No. At the beginning of the broadcast, when I went over the Logic 247 alerts, we've issued, since we rolled out Logic 247, we've issued over 14,350 individual handcrafted alerts. And over the 250 weeks, we've averaged 20% or less of them being stopped out based on the risk profile I explained at the beginning of the broadcast. And if you missed it, an hour after the broadcast ends, you can go to the YouTube channel and you can watch it. Or you can watch what we said yesterday, or last week, or last month. Just pick a day at random, okay? Because our story doesn't change. Our indicator, you know, we've been doing the same thing for years. Now that we've put our stuff on TradingView, there are some added benefits, a couple extra bells and whistles, but I'm just an old school kind of guy, so I'm just still using the same thing. If you scroll back 2 years in YouTube and fast forward to the part where I'm doing the recap, this is exactly what you'll see. Nothing's changed. All right, NQ. Here's where the market opened, pull back to the BBC, the pullback held. So we were never even thinking about the short target because the pullback held. And then we got the perfect stack. This candle opened at 517 and ran up to 545. It's over $500 per contract traded. And that one candle. This candle opened at 28, hit the target at 53. So that's $500 per contract traded. Just from the open to the target. If you've earned the right to trade 5 contracts, that's $2,500. 10 contracts, $5,000. Now, I gotta caution you. Maybe you got a nice nest egg. Maybe you just sold your business and retired. Well, you know, I'm a clever guy. I built this business, sold it at a profit. So, while for a young man or, you know, a newbie, they probably should go through that whole demo trading until they put together 10 consecutive days in a row and then go live with one contract. But again, I'm a clever guy and I have a lot of money. Well, I don't know how clever you are, but if you want to keep that money, worst thing in the world you could do is to just come out of the gate, guns a-blazing, no clue what you're doing, trade 10 contracts. You'll blow that account up like that. You'll refuel it, blow it up again. Refuel it, blow it up again. Until when? Until you learn how to trade. You're not willing to show up every day and do the work to actually let us teach you how to trade, then you should just enjoy your retirement, spend time with the grandkids, go fishing, boating, whatever, golf. All right, so we know we hit the long target, and then we found resistance. Where? But this is Friday, this is Thursday, this is Wednesday. On Wednesday, we defined where resistance was in the market, in the NQ. We spiked it a little bit, but boy, it sure fell fast. Price tends to drop a lot faster than it rises. Again, because it takes financial commitment for price to rise. But once buyers hit the pause button, boom, bottom can fall out. So as we drop, where do we find support? Now remember, last night we had resistance at the zone as we were moving up. 70% of the time, you're going to see this consolidation. And we drop to the zone, which is 14,510/14,511. Okay, so price got rejected. Remember, I said that would happen 20% of the time. But really, because it happened over 2 candles, it's if it was a standalone candle, that would be a rejection. Because there's 2 candles there, it's more of this and this and this consolidation. Now, not only did our members have these targets last night, they had these zones Monday morning at 6:15 a.m. Eastern. So as price was trying to rally up, they knew to expect resistance. As price was dropping, they knew to expect support. I mean, does it get any cooler than that? I don't know. Not that I'm trying to be the cool guy. I'm just trying to be the guy that helps you not blow up another account. Price can take out that high convincingly. Then something like 14,624. Let's take it up to 44. From 24 to 44. Okay. 40 points. $40 a point. $400 per contract traded. But you got to be prepared as price approaches. See, this was a green candle right up to that point. And then nobody was willing to pay 1 tick more. So what happened? By the time the 30-minute candle closed, this bullish green candle had become a bearish red candle. It's 11:11. So we got 19 minutes left in the life of this candle right here. I'd love to see it close right here. Then the next candle open, start printing green, take out this high, boom, boom. Goal for the day. That's 4 days of goal right there. Crude oil. Here's where the market opened. We had red and falling. We never pulled away from it. I mean, it just was no reason to go short here. Then we get above the BBC. Red and falling turns to blue and climbing. But we expect resistance right here. We got it. And we pulled back and actually pushed through the zone. But look where we ground to a halt. That was defined yesterday. Boom, boom. Now where's price? Finding support at a zone. So what do we want to see happen here? Price rally up to the BBC. Want to see the pullback hold. And then as we start printing red candles back down, then we short it. You only need 10 ticks to get your goal for the day. How big is 10 ticks? $70.60 to $70.70. $70.60, $70.70. That's $100 per contract traded. It's worth doing the work, showing up every day, having enough humility to allow someone to teach you, which we do 2 hours live every trading day, plus unlimited one-on-one mentoring. I mean, you can do it the hard way or you can do it the simple way. But let me tell you this, there is no easy way, period. There's hard, there's simple, no easy button. Not in the world of trading. Gold. Gold opened here, came down to the BBC, the pullback held. Got a little bit of a leg up. You know, is it something I want to trade? You know, nah, I mean, I want to see a move. Let's get a move on. Yeah. So we just consolidated. We did find support at the zone. Where'd we find resistance? At the zone. Today, yesterday, Wednesday. Where'd we find support today? At the zone. At the zone that was given to our members and trial members Monday morning at 6:15 a.m. Eastern. And here it is Friday. Oh, and by the way, we did hit the long target. The only way I would entertain trading to the short target is if price takes out this low. That's what this window of opportunity right here is all about. From 1969 down to 1965, that's $400 per contract traded. If the goal is $100 a day, that's 4 days of work. Silver. See, and here's the thing. You can learn how to do this. If you're willing to show up, if you're willing to do the work, if you're willing to follow the rules. It's not out of your reach, out of your grasp. You know, you can learn most anything if you apply yourself. But if you just want to click the mouse and get rich quick, don't even waste your time with the trial. Because we don't have that program. Okay. So we pull back to the BBC, and the pullback holds on silver. You only need 2 pennies in silver to make your goal for the day. This candle, we got our perfect stack. This candle opens at 24.44, and it runs up to 24.51. That's 7 pennies. That's $350 per contract traded in one candle. And then we pull back to the BBC, and even though we spiked it, notice every candle is touching BBC, so the pullback held. Looked like it wasn't going to, but yep, it did. And then what do? We run right up to the target. Spike it by a little bit, and then we come right back to the BBC. Price always reverts to the mean. Now we're below the BBC, and we got red and falling overhead. So what's a trader to do? How about that? 24.33 to 24.31. Done for the day. Put the mouse away. Price gets below this zone, then goodness. 18 cents down to the target. That's $900 per contract traded. That's if price gets below the zone. Remember, if price starts dropping, we expect for there to be potential support right there, and then right there, and then at the zone. But if price falls through that zone, lots of room. Euro. Open here. Got support below, resistance overhead. It's just a mess. Don't trade a mess. Go look for something. It's obvious. Now price starts dropping here. Okay. Then it found support at the zone. Support will send the market looking for resistance. You already knew where to expect resistance because the chart told you where to look for it. Then price gets back below the BBC, blue and climbing, turns to red and falling, and price is now dropped to here, which is that exact low right there. Hasn't hit the target yet. It may pull back to the BBC first and then drop some more. The step line is trying to cross red and falling. If that step line crosses red and falling, then look for a pullback. But that would be a counter trend trade to go long. I only go long above the BBC. I only go short below the BBC. Doesn't mean you have to, but yeah. If you want to know, now you do. Okay. So we hit the resistance that we defined, I guess, on Monday when we put these fib extensions on. And support is always when price is dropping from above, step line, blue and climbing. Next, the 24% fib extension and the BBC. To become a lifetime member with no recurring fees. Say that again. No recurring fees. You pay once, you're a member for life. There's no fine print. No recurring fees, no upsells, no nonsense. Own the indicators for life. You have lifetime access to the live training room, lifetime access to private one-on-one mentoring, strategy and indicators. Work on everything. Every futures market, every individual stock, every cryptocurrency, every forex pair, every ETF. Despite your best analysis, will you get stopped out? Yep. As I mentioned, in the Logic 247 channel, out of the 14,350 plus alerts, over 250 something weeks, we've averaged 20% of them getting stopped out. Because sometimes we never know what the market's going to do next. I know some people try to sell you that bill of goods, but we don't. We don't know. Nobody knows. No one can know. Not man, not machine, not algorithm. It's not possible. Defies the laws of science, physics, and even God. But we can know with a high degree of accuracy what the next high probability move is. World of difference between knowing what's going to happen next and knowing what the most probable thing is. It's been a great week. Let's wrap it up with our good word for the day. Yesterday we talked about the fact that we all need others. Now, somebody out there, I don't know who you are. I'm not a psychic or a prophet. But somebody's struggling in their marriage. Probably more than one. So for a couple of days, we're going to talk about restoring your marriage. Matthew 7:27. The winds blew and beat on that house, and it fell. Today, about 50% of all new marriages end in divorce. Now, what's really sad about that statistic is it's true whether you're a Christian or not. Sometimes the reasons are circumstantial, such as a redundancy or a home repossession. Other times it's relational, such as a betrayal of trust, maybe an addiction to drugs and alcohol. There are times when separation is a necessary option. But if you're committed to rebuilding your marriage, you must learn how to reconnect and work to restore what you once had. In order to accomplish this, you must be willing to enter into the process and commit for the long haul. So for the next few days, we're going to look at 4 key areas. First, you must know the other person. And you're thinking, well, of course I know him. I married him. No. You must know the person. I know Joe Biden is president, but I don't know Joe Biden. And you might know who your wife is, but you don't really know wife or husband. Swings it both ways. In order to accomplish rebuilding your marriage, you must both be willing to enter into the process and make a commitment for the long haul. So 4 areas we're going to discuss. First, you got to know the other person. It's a mistake to try and figure out your spouse, put them in a box, and label them for the remainder of their lives. Knowing someone is an art in progress, not a static science with unchangeable data. You must view your mate as a mystery who requires ongoing scrutiny and lifelong learning. The Bible says in 1 Peter 3:7, husbands, in the same way, live with your wives in an understanding way. Now you might say, man, my wife, she's always angry. Okay? There's probably a reason. Could stem from her childhood. Could because one of her circle of friends betrayed her. Or it could be a million different things. Once you ask her, honey, and not in a hostile way. Hey, honey, seems like you've kind of been upset a lot lately. Did I do something? If so, I wanna make it right. If it's something else or someone else, I want to help you solve it. That works a lot better than, why the hell are you always pissed off? That ain't gonna get you anywhere, is it? In order to restore your marriage, take a fresh look at your partner. They may not be who you assumed they were, but neither are you. You must allow room for each of you to evolve and resolve. And so important, you must include God in the process. Jesus said that a house built on the solid foundation of God's Word would stand strong in the storm, while others around it are falling apart. Read Matthew 7:24 through 27. You don't have to be another statistic. When people ask my wife and I how long we've been married and we say 40 years, they're like, what? Come on. Really? Yeah. How'd you do it? My answer is always the same. I put her wants, needs, and desires ahead of my own. She puts my wants, needs, and desires ahead of her own. When two people agree to do that, the enemy can't win. A 3-cord strand is not easily broken. That would be you, your spouse, and God. So today, whoever it is out there I'm talking to, begin the process by recommitting to God and each other. That means you're going to have to sit down and look each other in the eye and have a discussion. That's our good word for the day. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.